oh my God, did that just happen? Yes, you're up 1,100% in like 200 days. Yeah, it's going to happen, okay? I mean, now, software is another one. I mean, like I told you in Saturday's video, this is a sector problem. It's not any one stock problem, okay? I mean, you can see this. 78% for FIG, 74% for trade desk, Duolingo down 74%, Team down 63%. Here's Microsoft. Had its 12th largest one-day drop in the history of it, and it's been around a long time. It's the king of software. Okay, so none of them are immune right now. And Palantir is reporting Monday. I believe it's after the bell, if I'm not mistaken. And so, it's in this area, still trying to hold this area, which back going to August last year is where it's bounced multiple times. But I would definitely say watch out for right below here, anywhere from like 135 to 140-ish. Again, I don't know how we're going to open up tomorrow. Right now, I mean, we can have a huge move up in after hours. Right now, you would think we're going to open up down for sure. But, watch that area and see if you get a bounce. Because remember, when this one was going crazy, it wasn't because, they have great software, because it was getting a lot of defense contracts, right? Well, all the other defense companies have been going up, right? Some of them set new all-time highs. And this one's been going down almost the whole time that's been happening. Because when it's talking about increasing defense budget, everybody thought, man, Palantir is going to really go down. It didn't. So that lets you know it's being treated as a software stock. Every big down move like this in a sector eventually subsides itself, but you just gotta wait. I tell people, man, just let this stuff build up market structure. Again, earnings can change a lot of stuff. You can have these big pops, but if you notice on them, especially like a lot of even the Mag 7, a lot of stocks that usually have big pops, they aren't having them now. And even if they have the big, a nice pop, they're not holding them. It was Now did that the other day. It had like a 5 or 6%, maybe on 10% pop. And then lost everything and set a new low, new 52-week low. So, we'll see what they got to say. Now, crypto, of course, melting down on Saturday and Sunday. This is another one. Watch this area somewhere in the neighborhood of like 67 to 73, I believe it is. Just watch that area right there to see if you get a bounce. That's what we got to find out. And of course, what's this going to affect? The IRENs, the ciphers, all these different stocks. Watch this trend line, see where we open up, see if it holds 49.24. If that does not hold, say hello to 43.45. If crypto starts to get a bounce, then these right here, because they get the majority of their revenue from crypto mining, then it will bounce as well. And it was interesting. I saw this Thursday where Representative Dale Strong made a single stock purchase yesterday. It's actually his first one ever reported. Maybe he's new to the Congress. He bought IREN. And so he sits on the Appropriations Committee, which sets government spending. So an interesting buy. I just put it out there because remember the last guy who sold UNH was right. And of course, he didn't have to suffer that drawdown at all. And so we'll see what happens. Again, Cypher is sitting here. It was wedging. It should open up outside this wedge. So watch for 15.08 to hold right there. If that does not, then look for 13.25 is going to be on deck for this one. And again, all of these riots, all those are going to end up coming down. So if we open up like we are now, what you would think, that's what's going to happen. Again, we've had these big overnight moves, so it's always kind of crazy to figure out what's going to happen with some of these. But SoFi, somebody asked me about this one. It just reported. And you can see, obviously, it popped on earnings, sold completely off, just like everything else, not immune. This is another sector issue. All of these fintechs are selling down, every one of them. And so it's not just this one. So watch that area right there to hold. You really want that to hold. If it does not, you're going to be coming down to challenge that 18 right there, which has been resistance in the past and support, for example. So definitely watch 1831 if that area up there doesn't hold, because you just don't have any kind of support at all. You have to have a gap down below that. So anywhere from 1726 to 1824, if you get that 19 to 21 to fail right there. And you can see with momentum, I mean, on the daily you see it, on the weekly you see it's falling below the 50 on the RSI, the MACD, it hadn't gone below zero, so that's good. So there's always hope for this thing to pull back up. But the big thing to watch out too tomorrow is SoFi, the 200 is what saved it on Friday. And so this is going to end up being another hood, right? So if we open up negative, it's going to open up below the 200. Now we get to see if this area holds. What happens on the retest? Does it get back above it? Because in the past, you can see where it's been support, resistance, support, resistance. So it does respect its 200 moving average when it comes down. That's why it held on Friday. And so just like with Hood, we had pointed out it was around that 200. We had marked it out. And when Hood came down and ended up breaking below, when it came back up, what happened? It ended up getting a big slap down, okay, big rejection right there, and started heading back down. That's why you're sub 100 on Hood right now. And again, this one is another one, same as SoFi. What's happening? They have big exposure to crypto, okay, and crypto trading, things of that nature. Coin, you saw this one, 200 moving average slap down. It's been down ever since. So 200 is very powerful in that move back up. You have 2 rejections there. Boom. Down we've gone. So all of those have exposure to crypto. That's nothing that's going to weigh on it. Okay. There is, some weekly imbalances down here you do not want to have to get through. That would not be good for this one. So just kind of keep that in mind. I did put that trend line there, waiting for a third touch on the weekly right there. If we do break down that area over the next month or two or something. So that's just for the future though, not for right now. Looking at SPX and the Dow real quick. You can see the SPX, it'll probably open up, I'm assuming, right around that trend line or 50 moving average most likely. And so we'll see if that's going to hold. You got the 100 below. And so we're watching 68, 25-ish right there. And then 67, 63 as well. And there's a gap right below that. So that's what we're going to watch for on that one. The good thing for SPX is you got energy going. Okay, so unlike the Q, which is all tech, so it does have some sectors that are doing well. But you can see on these lines, where I got them drawn out, there's been many times support resistance on both of those. So if you're a bull, you really want to try to hold these two areas right here. When you look at the Dow, now this is another one I rarely even talk about, but looking at this one, there's a gap and a large fair value gap right there. So we should open up below that white line. If we come down, take that area out, watch around 48,200 to 48,400 for something like this right here, right? So you end up getting above that one and then see if we start to take back off.
But even as recently as the tariff kerfuffle, it lost 61%. So this is high octane, right? High beta and so forth. Let's look at the next chart. It's all the same chart. Where we are in relation to the smoothing mechanism. This is the highest reading ever recorded, ever, 125% above the green line, even including at any point in the .com. The highest ever got in 99 was 88% above. We are 125% above. Next chart, it's the same chart again. I'll be damned. We're up to the upper band, to the penny of a channel that's been in effect since the financial crisis low. $1.59 at the low, $4.55, compounded annual growth rate, a CAGR of 40%. I mean, the first thing one should say, stop right here. What the hell's wrong with all of us? Why did we just buy Micron? But anyway, moving on. Next chart. So I've put a red arrow there. Mm-hmm. That comes to mind. Let's do a few more and we'll quit. So here's quadrants. Now, that might be the last chart. I can't remember. No, this is the last one. All right. So now one could do what the green and red arrows suggest or not, but too much of a good thing is how we title the report. That's my thought on Micron.
So this is in a 16, maybe longer. It's called an 18-year uptrend or so. I think, the
right, 20-year chart, and it's 8 from the low, right?
Fair enough. So the uptrend is still obviously intact. And what you just pointed out, and I'm not comparing gold to Micron. I understand they're two things, but as Dan has been saying for a while, gold, which had been going parabolic and been trading significantly many standard deviations away from the 200-day moving average. It was just a matter of time before you saw the move that we're seeing, and we'll talk about that in a second. So I say to you, I mean, this is albeit commodity versus an equity, I get it, but it's a very similar set of circumstances, something that has recently gone parabolic and finds itself, 4, 5, 6 standard deviations away from things that are normal. And it's reached the top point of an up channel again over the last 18 or so years. So thoughts on that?
Yeah, I mean, it just seems full, back to, again, valuation as proven by the fact that the stock could move this aggressively from where it was in the tariff low and drop 60% because of tariffs. Valuation is a gray area. But what we do know is that when you get spreads that are wide and listen, parabolas, not to say that, who can define a parabola? Steep and uncorrected things have a way of having shocking givebacks. Most notably, it could be precious metals, but we see it all the time. And that's these are risk assets. Look, how could Microsoft drop and gap like a third-rate pink sheet stock? But it did on its earnings, right? And so forth and so on. And so it's just a little bit of musical chairs comes to mind, where it's a steep, uncorrected, and it's a theme, right? It's the last holdout. And you inferred that in your conversation at the top of the hour, right? That, it's SanDisk and it's Western Digital. As other things, Apple has struggled and struggling, and Microsoft and software in general, and then all of a sudden, certain financials, JP Morgan's down and so forth. So it's this is and then precious metals, and all of a sudden Bitcoin's not reliable. This is the ultimate risk asset now, where the dreams are still alive and no one has been hurt. That has a way of being crowded.
Well, to your point, I mean, that tariff drawdown from the highs in February to the lows in April, 60%. And I think a lot of folks just have very short memories. They just can't think that this is going to happen to their favorite, tech stock, because this is the new thing. Carter, really quickly, because we want to hit silver and gold. You just mentioned Microsoft. So here the stock was trading 550, just basically in late October, right? And this is one we've talked about a lot. You see those two new highs, those big gaps. That was after the last two earnings. Mm-hmm. Now we have this gap to the downside. You see, I think that's the 150, it got back up there, was repelled. Is that 400 in the offing? Let's go back.
Yeah, gaps, like a lot of gaps have, not all gaps are filled by any measure. There's that kind of thing. But this is a stock that's exhibiting bearish price volume correlation, poor relative strength. It has a double top that is meaningful and increasingly meaningful the further it goes below that level. And it has a re-rating up back in May, fundamentals. It gapped up, and now it's just gapped down, also fundamentals, earnings. And in general, I would say they could always overshoot, and as they often do, to the upside. When does Oracle stop? Oracle went bonkers to the upside, down bonkers to the downside. At some point, there's a fair price for Oracle. But I would say, with new money, if one's said, what should I do with this stock? This is a short, it's a sell, not a buy. And if one is still in it long, I would continue to reduce, take measures, because the risk is that it continues lower to and prospectively below 400.
Palantir tonight after the close.
Not a great chart.
Not a great chart. So look at that, and that little support little channel we did. It's kind of your view, right? It's support is not, or resistance is not a exact point. You can fall into it, you can rip into it, that sort of thing. So what do you think here? I mean, here we are at $150. We are above $200. The stock had really stalled out. A similar view that you had, let's say, in like an NVIDIA. This one, to me, I've said, is the dumbest effing stock.
Whoa.
I didn't use the word, though.
Okay.
That I've ever seen in the stock market. And I mean that. Let's go to a 5-year, this is a company that might have $6 billion in sales this year, is trading at 100 times sales. If that was earnings, it'd be egregious. So not a good chart, but is it at levels here going back to, let's just say, November, going back to September? What do you do here?
Yeah, I mean, so there's a large constituency of people who said you don't do anything. You never go in front of an event like this. This is just, you're going to short this thing because it's a terrible chart, and printing 170 in the indicated higher, and in turn get long because you think it's cheap. It's very high. So I would frankly not go in ahead of the number. But if we just stick with the principles of classic charting, we have a stock that has a circumstance of unusual and extraordinary strength that then in has started to stall and roll, a topping out formation, what characterized in the language of we're charting a bullish to bearish reversal sell. And I think the risk is, of course, that even if it's a good number or not good, that you have a substantial Apple type, Microsoft type drop and gap.
Yeah, the head and shoulder, we've been highlighting the head and shoulders. I mean, this is taking a lot longer than I thought it would, but here we are, broken the 200-day moving average. You start talking about a measured move now, and this level, I mean, this 150 level is absolutely a bit of a line in the sand if you draw that horizontal line across those bottoms. So we'll see if and when, but a measured move, and I can sort of do the math in the back. You're looking at probably 120 to 125 or so here, Dan.
Yeah, I mean, this is something I've been kind of picking at with puts over the last, I want to say, a few weeks, maybe a month and a half or so. And it hasn't been that easy of a trade because, it feels hard to press something, and especially right here as it's trying to kind of hold at those prior levels. And I think what Carter just said is an important one. And I could see this, a beat and raise, depending upon the magnitude, you're gonna get a pop to 160, 162 or something. And maybe that's a better thing to wait, playing for, let's say, this move back to 125 in one fell swoop on a gap, you know what I mean? On kind of a, let's call it a beat and modest guide. I mean, they should sell it, but who knows? So maybe a wait on this sort of thing. All right.